very good morning. Terrific Tuesday today. Three things that we will talk about. GameStop, war between day traders and short sellers. Merk pulls out of the vaccine race and Tencent jumps 11%. Investors kept betting on big tech Monday, but the side bets are getting more interesting. Monday's mixed market showed a clear preference for tech names, already so dominant. Apple, Microsoft and Facebook made solid gains ahead of their quarterly results scheduled for later this week. Those weren't quite enough to offset weakness in other sectors like finance, which saw notable declines from companies such as Goldman Sachs and American Express. But the new day brought a new chapter in the escalating war between day traders and short sellers. Video game retailer GameStop, which has seen its share price more than triple over the last 2 weeks, took off again on Monday. A 145% surge that evaporated and became a 6% downturn, at least 9 trading halts, and countless Reddit posts, tweets, emojis, whatever. It's all part of the ongoing battle between short sellers and retail traders. After the dizzying ride, the stock closed up 18%. Movie theater operator AMC Entertainment shot up 26% by the close following a new financial deal. Bed Bath & Beyond shares also shot up more than 50% at one point before settling back for a gain of about 2%. The volatility was insane yesterday. By the end of the day, the Dow Jones closed down about 0.1%. The S&P was up 0.4% while the Nasdaq rose 0.7%. More than 1/5 of S&P 500's index and 1/3 of Dow Jones components are scheduled for release earnings this week. Starbucks, Verizon and Microsoft are slated for Tuesday. Other major tech firms are reporting later in the week, including Apple, Tesla, Facebook on Wednesday. Concerns about COVID-19 vaccine supplies have also sent jitters through the markets. Pharmaceutical giant Merk scrapped its plans to develop a COVID-19 vaccine after trials yielded disappointing results, pulling a major player out of the virus race. Merck's announcements came after AstraZeneca warned on Friday that its vaccine deliveries to the European Union could lag some projections. Stumbles in the vaccine drive and the spread of new virus variants have helped fuel the recent gains in tech stocks. The biggest tech companies are seen as benefactors from stay-at-home orders as firms and households increase the use of digital technology when operating remotely. The tech and social media stocks were volatile. The Apple was up about 2.8%. Shares of data analytics firm Palantir Technologies advanced about 11% to close ahead of a high-profile demo of its software planned on Tuesday. While Twitter, on the other hand, fell 0.5%, Etsy sank about 2.2%, the online marketplace. Energy stocks and financials were also among Monday's underperformers. Chevron fell about 0.9% and Goldman dropped about 2.2%. In other markets, the Euro Stoxx 600 fell about 0.8%, which analysts attribute to reports that UK and France are heading towards tighter lockdown measures. In Asia, most major stock benchmarks rose. The Shanghai Composite added 0.5%. The Hong Kong Hang Seng was up 2.4%, buoyed by a rally in tech shares. The South Korean Kospi also advanced 2.2%. The index heavyweight Samsung rose about 3% and chipmaker SK Hynix rallied about 5%. Both are slated for earnings this week. This analysis on Bloomberg on Tencent's move was pretty good. Hong Kong's equity traders can't get enough of Tencent Holdings, the 950 billion giant that's on pace for its biggest ever monthly gain. They are paying up for bullish equity derivatives tracking the Chinese tech firm, buying thousands of January call options that expire Thursday. The price of one Tencent contract, which bets the stock will rise past $800 by expiry, surged as much as, hold your breath, 118,300% on Monday. Traders also rushed to offload their bearish puts, with one of the most traded contracts losing more than 84% in value. The stock rallied 11% on Monday to 766.50, its biggest gain since October 2011. With this, the Hong Kong Hang Seng closed above the key 30,000 point for the first time since May 2019. Tencent has become a prime target for mainland traders as well, flooding record amounts of cash into Hong Kong listed shares this year, with net purchase of stock accounting for roughly a quarter of the total money coming in. This is according to exchange data. The buying frenzy has also boosted Tencent's market value by about 250 billion this year, the most worldwide, according to data compiled by Bloomberg. Tesla is the second largest gainer, up 134 billion. Tencent's portfolio company, Kuaishou Technology, a TikTok-like video recording app, announced a coming initial public offering that may value it at about 60 billion. So all of this added to the positive sentiment that Tencent enjoyed yesterday. That's the update. Stay safe and healthy, everyone, and I'll speak to you tomorrow.